back to my channel. Today we are going to talk about tips to help you prevent blowing your entire account. I know this is an interesting topic for every forex trader because mostly if you look at traders who have traded for at least 1 year, you would notice that most of them would give an example of a time that they've blown their account. So most traders who have experienced traders in the market have blown their account at one point or the other. And if you're new to the market and you've seen this and you're wondering what is blowing of account, what does that mean? It means losing your entire capital. You're trading with, say, $1,000 and you begin to trade. Sometimes you win, sometimes you lose, but then there comes this time where you begin to lose money consecutively, or you make one big loss and then you come back to your account and what you're seeing is zero balance. So how do you avoid this? Because it is only human to want to prevent losing money. We do not want to lose money. We rather want to get into the market and begin making all the money. So what can you do to avoid losing the entire capital or to reduce your loss? Since we know that while it is human that we do not want to lose money, we cannot avoid it entirely in the market. The Forex market is big. It is moved by the power of demand and supply, and you cannot control the direction of the market, okay? So it is just inevitable that there are going to be losses. However, the goal is how can you reduce and make your losses as little as possible while your winners get bigger, so that at the end of the day, you can consistently go home with consistent net profit, all right? Or so that at the end of the day, you do not lose your trading capital or blow your account, as we commonly say in the market. I'm going to give you a few tips today. And the first one is you need to be educated about your trades, all right? You do not want to just jump into the market because one trading pro or trading expert is taking action in that direction, is doing a buy, and you also decide, okay, I'm also doing a buy now. Why? Because the timing is important first. You probably would not be able to go in at the same time this expert is going in. The trading expert has already bought and is now giving you a signal and saying, okay, I'm buying this. You are jumping in. It's likely too late at some point, or you don't understand why you're doing the trade. It is important that you trade professionally. Even if you take advice for trading experts from pros in the market, it is important that every trade you take, you are accountable for them. You know exactly why you have done a buy or why you have done a sell whenever you do so, okay? So very importantly, you need to be educated about your trade. If it is, you're looking around a support or resistance, maybe you're a technical analyst or a fundamental analyst, you look into the market, you look into the news, you know that these are reasons. I was discussing with some of my students earlier. I was holding a live session, and I said that for you to have high probability setup, you need at least 3 factors, okay? 3 factors that makes you enter. All right. So you're entering a trade. You want to have at least 2 reasons that you can say, okay, these are the reasons. This is, I saw this, I saw this, I saw that, and this is why I am doing this buy or I'm doing this sell. Okay. So you should have your own personal reasons why you're buying or selling, not only based on what someone else's action is. Okay, you can base your trades on advice, on the reason why someone wants to do a buy, but not because that person is doing a buy and you also just decide to do a buy without understanding. Okay, so tip number 1, be educated about your trade. All right, the second tip is keep your emotion in check. It is very important. Many trading experts will tell you that trading psychology is like 80% of trades. All right, your psychology, matters. Your mental health, your emotions, they matter a lot when it comes to the market. You want to be able to trade not because you are panicking, everybody is buying and you want to buy now, or some distorted emotion in the market, you're not in the right frame of mind, it may not be a good time to do a buy or sell, even if the market looks all good for you. So you want to have your emotion in check. You want to ask yourself, am I in the right frame of mind to do a buy now or a sell now? Am I even ready for this market at all for today? Okay, so your emotion matters a lot. You do not want to jump into the market simply because you're having fear of missing out. What we call FOMO in the market. You do not want to jump into the market because you have this fear of missing out. Everybody's buying, and you also want to jump in and buy so that you do not miss out on the trade. These are not the reasons why you should trade. And the third tip I'm going to give you for today, before I call it a day, is risk management. You need to ensure to apply proper risk management in trades all the time. Very important. Like I mentioned earlier, losses are unavoidable. You can't entirely avoid making losses in the market. So what do you want to do? You want to ensure that you do not risk more than you should. It is advisable that for every trade you take, you shouldn't be risking more than 2% of your trade. 2%. Wow, that's so small, you may say, but you shouldn't be, because that way, if you lose some money, it is easier for you to recover your losses with IS of 2% risk than when you're risking more. When you risk more and you find yourself in what we call a losing streak, where you just take several trades and almost all of them are going against you, and you are risking much more. You're risking 5%, 10%, for instance. It is harder for you now to recover the losses when you're risking more. So it is best when you reduce your risk per trade. Very important. Reduce your risk per trade. Ensure that you're not trading more than you should, maybe trading the same currency pair same time, several of them at the same time, multiple pairs at the same time that are from the same zone, or in fact the same currency pair. Let's say you're trading euro yen and you have euro yen entered like 10 times or 15 times, 5 times. You're no longer risking 2% now. If you have 10 of them going at the same time and you're risking 2% per trade on each of them, you're risking already 20% of your account. So if that goes against you, you're making a lot of losses. Okay. And another important thing under risk management is your stop loss. Always ensure that whatever trade you're taking, you have proper stop loss set and in place for you, such that you do not risk without any safety net for you. So if the market goes against you big and there's one unexpected move in the market and it goes against you, you suddenly blow your account. But you have a stop loss, and this stop loss, you've set it in a way that where it is based on the lot size you're using, you're not risking past the 1%, 2%, or 3% you've decided to risk in the market. Okay, so I hope that these 3 tips would help you do better in your trade as the week runs on. The first tip I gave: be educated about your trades. All right. The second tip: keep your emotion in check. And the third tip is to manage your risk. Do not forget, you do not want to blow your account again. The first step, that's the first step. You want to get a level of consistent profit in the market. You need to first secure your capital. And that requires that you understanding how not to blow your account. So follow these tips. First, prevent blowing your account, and then start getting to the level of consistency where you begin to make good money for yourself in the market. Take good care of yourself. And please remember, if you would like to get access to full training package where you learn to trade like a professional from basic through intermediate and advanced level, please do well to take a look at our training packages. You may go down below this video. If you're watching this on YouTube or any of the platform you're watching it from, go through the details below the video to take a look at some of our training packages and reach out if there's any reason to do so.